So in today's video, we shall be looking at one of the bullish reversal patterns called the hammer. And you will be learning three things. What is a hammer? When do you expect a hammer? And how do you trade a hammer? These are the three things that I shall be teaching you in this video. So if you are new to my channel, kindly subscribe to the channel, like the video if you find value in it, and share the video too. Without further ado, let's get into the business of the day. What is a hammer? A hammer is simply a candlestick pattern with a long lower shadow, a small body, and a little or no upper shadow. The color of the body, whether bullish or bearish, does not really make any difference, but it has to have a little body, a long lower shadow, and a small upper shadow or no upper shadow at all. So when do you see a hammer? When does a hammer occur? A hammer occurs after a prolonged bearish move. Like in this case, it occurs after a prolonged bearish move. So how do you trade a hammer? First, identify a very prolonged bearish move. That is the first step. Once you identify a prolonged bearish move, then spot if there is any candlestick pattern with a long lower wick, a small body, and a little or no wick. If you can spot that, wait for a bullish confirmation, which is another bullish candlestick immediately after the hammer. So let's take Euro AUD daily time frame chart for example. For the past 2 weeks or thereabouts, we've been having a very prolonged bearish move, and at this point we observe this candlestick pattern with a very long lower shadow, a small body, and then a short or a small upper shadow compared to the lower shadow. So this is a hammer. Before we can trade it, we need to wait for a confirmation in that bullish direction to show that the bulls are in control. Now, but before I go on, what does a hammer tell you? A hammer is telling you that the bulls are in control because the price was driven down by the bears, but the bulls were able to take the price far up after the bearish move. So that is telling you that the strength of the bulls in the market is high, but you need to confirm that with the next candlestick. So now we've waited and the next candlestick formed and was able to close bullish again. So at this point, we know that the bulls are truly in control. What do? You plan to take a trade. So how do you trade this? The first is you can be either aggressive or very conservative. If you want to be aggressive, once you see that this candlestick has formed, the confirmation has formed, you can enter instantly at market price and set your stop just below that confirmation candlestick. So here is the aggressive method. My account is about $101,000, so I will be risking nothing more than $1,000 in this single trade. That is just 1% of my account. So now that I've decided that I want to go into the market, where will I be taking my profit and where will I be putting my stop loss? As an aggressive trader, my stop loss is going to be below this very confirmation candlestick. And where will I put my take profit? I'm going to put my Fibonacci. With my Fibonacci retracement tool, I'm going to know where this market is retracing to. So the first point I'll be looking at is 38.2, then 50.0, then 68.8. So which area do I really have my resistance aligning with? This is where I have my resistance aligning with 50. This a resistance. This is an area of previous supports, and it has turned resistance, so it aligns with 50.0 retracement level. So I'll be heading to 50.0 retracement level, that is at 5387. I'll put my trade 0.5, stop loss 4755, take profit 390. I can place the order. Now that is being aggressive, but if you want to be conservative, you can wait for a retracement to the top of this very hammer, and then still put your stop loss below here and target the 50. So I can place a pending order. I can put a pending order instead of instant execution. I can put a buy limit, and still my stop will still be at 4755. You can see in this case I've reduced my risk, and then my take profit is still at 5390. So in this case I've reduced my risk and increased my reward. So this is how you can trade it. Right now I have a buy limit, expecting that there will be a pullback to this point before the market starts moving up. So my stop loss is just below this very confirmation candlestick, and the target is still the same. And for someone who is more ready to wait, you may be targeting 61.8 retracement level. So this is how you trade your hammer. And a hammer is a bullish reversal candle pattern. Whenever you observe a hammer, it's telling you that the bearish move is over and that the bullish move is just started. I hope you enjoyed the video. If you did, kindly like my video, subscribe to my channel, and share the video with others. You can also watch my video on candlestick patterns to understand all the candlestick patterns and how to trade them. Bye.